Welcome back and thanks for staying tuned to Power Breakfast on CNBC-TV18. And on to the big macro data of the day. India's retail inflation moderated in December, coming in at a 4-month low. Latha Venkatesh is here to give us the details and decode the CPI data for us.
It's the best news that we have got for the economy in quite some time that the December CPI has come in at 5.22% compared to our poll of 5.3, and there were quite a few respondents who were expecting even 5.4. And now it's 3 months in a row that the inflation has fallen from 6.2 in October and 5.48 in November, now to 5.22. The average of October, November, December now is a little lower than the RBI forecast. So there will be a little bit of expectation that the Reserve Bank will look at the falling trade and show it as a reason why it can cut rates in February. The best part was the fall in vegetables, especially this tomato, onion, potato, top as it is called. That's fallen sharply, and economists tell us that if you looked at the January numbers, they are looking like falling very sharply in the first January as well. So that rekindles rate cut hopes. But overall, the worry is that food inflation is still at 8.39% compared to the 8.3% poll that CNBC-TV18 did. The only negative point was cereals inflation is not falling month on month, and even year on year is still at a high 6.5%. Likewise, edible oils, after the import tariffs were raised, that is still a 14% year on year inflation. Those are the two difficult points. But to counter it, core inflation, which is the non-food, non-fuel inflation, has fallen to 3.6 compared to the expectation of 3.7. So all told, a good inflation number rekindles hopes of a rate cut from the Reserve Bank in February.
Okay, Latha, thank you so much for that. But